Well, hello there. This is Bruce at Fleet Capital Management. It's Friday afternoon, the second day of June 2023, and we can all raise a pint and say we survived the debt ceiling crisis. It's always a crisis. In any event, this should be a short video. We're going to take a look at the market, see what things look like this week and what we expect for next. The video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. Please subscribe to the YouTube channel that you're watching this on. Also, feel free to click the thumbs up if you like the content. And any questions at any time, email me, Bruce at Fleet Capital Management, and I'll get right back to you. Homepage of our website, fleetcapitalmanagement.com. Two buttons over on the right. The first one will take you to the most recent market analysis videos, and the one on top will schedule a Zoom meeting with me so we can have some privacy and take a look at your account and answer any questions you have more specific to you and less specific to just the overall market. So here is, well, actually, before we do that, here's the matrix that I update every day, the trend matrix. This is updated through today. On the short term, group one uses daily signals. We're in an up. Group two, a little bit more conservative, uses weekly signals, up. Our DMAs, which is daily moving averages, I'll show you these on the chart, is in a very bullish configuration, and our weekly is in a bullish configuration as well. So as long as this is bullish, we're in a bull market, and we are until we're not. So let's start with moving averages. Here's the S&P 500 on a daily chart. There is the 50-day moving average. That's probably the most important moving average of all the ones we take a look at. You always want price above the 50-day moving average if you are buying. If you are buying a stock like I buy on your behalf, I don't ever buy if they're below the 50-day moving average. So it's a very important moving average. I just put on the 20-day moving average in blue, the 200-day moving average in red. And remember, when the 20 is above the 50 and the 50 is above the 200, we are in a technical bull market. A couple other things I noticed from these moving averages is they have a really nice angle, almost a 45-degree angle. And actually, the shorter term 20 is turning up, probably because of the strength of the market today, or the last couple of days, actually. And finally, I'll put on, just to show you, I will put on, the 8-day moving average. I use this not for trend, but for buys. So you can see the 8 right here crossed above. That's the yellow line. That means it's an even stronger average, a stronger movement in that underlying stock. So I use that when I'm buying stocks. So that's the moving averages. We'll take that off. Bear with me one sec. Let's get rid of that. And, well, we'll just go from here. So there's our moving averages. I'm going to take that off. Actually, I'm going to just leave the 50-day on because that's the one I use every day. So then we can go to what's called the Hull average, and the Hull average is more of a band. You can see it does a really good job catching bottoms and tops, and it will be volatile as the market is volatile, but you can see we're in a Hull up, which is right here. That's the Hull up. So that's another good sign. I'll take that off. I'll put on our super trend. These are the ATR dots. I use ATR for two things. One, stock direction. There's no way when the price is below the ATR dots that you're going to be in an uptrend. You can have some up days, you can have an up week, but we're not considered an uptrend until we're back above the ATR dot. So I use it a bit for that, but I mostly use it for stop management, to give a security enough room to move around its normal or average range, average true range, ATR, but also tight enough that we are moving these up and collecting higher profits. And I'll show you that in just a moment. We have, let's see here. These are order blocks. I can see that there was an order block here. There's a very small order block here. These are institutional orders that were just sitting out there, and they almost act like a magnet if you will, price tends to go to these order blocks. Even when it jumps off, it'll go there, act as support, it'll jump off, it'll come back down. So I like to see those institutional order blocks to see what's happening behind the scenes. And then we have this blue line and red line are forming a triangle. It's called an ascending triangle. And if you can see the pop-up that just came up, that is a bullish pattern. I have a pattern recognition system on here that from day to day is looking for different patterns to help give an idea. So the bottom line is we're in an up market. We have green or lime bars. That means strength. We have, this is called a trend catcher. That means strength. We're on top of the green ATR dots. Everything looks good to me. Everything looks good to me. Even if we go down here to the ADXDI, the ADX, the green is very high. And something else that's nice is that the ADX, which is the white line, is crossing the red line. Generally, not always, but generally, that's a pretty strong signal that we're going higher. The only thing that is negative that I'm seeing on this particular chart is I'm seeing this divergence. And what that means is price is moving higher, momentum might be coming down a little bit. So what that means is I would not be surprised if next week we see just a little bit of a pullback because that momentum shift, and that would be normal after some very, very strong days. So that's the only negative, but I don't believe that's going to be long-term at all. One other thing that's very powerful on this chart, I just drew this white line. This was the February high. And remember, in a couple of weeks ago, I told you we have to break through and hold that February high to be able to go higher. And here we broke through, it failed, it came back, which is very normal, and then it busted through it again in a big way. So that's a really strong mark that we have broken through that February high. Now, let me show you, I'm going to take that off. And let me scrunch this. This was the August high right there. And if I put on, let's see if I can do that here. Nope. Let me try something else here. I think that'll work. And we're going to move it up. There we go. So now we have the August high. Look how close we are to the August high. My guess is, again, because I'm seeing a little bit of divergence here, negative divergence, I wouldn't be surprised. Market comes back down, probably around to this level where that little gap is, and then heads back up. And over the next couple of weeks, we're going to try to break through that August high. What that signifies to me is we would be going significantly higher as we go to the second half of the year if we can break this high. We are not very far away. And again, very normal for it to come back right around to that blue line or this little break right here. So you might see some negative days early next week, and then we'll be heading up north once again. I have very little doubt. Couple other things I want to show you. Avgo, one of our stocks, has been doing just terrific for us. This purple line is my entry. That's where I bought it. This was our initial stop, which is usually 7 to 8 to 9% below, just depending on the technicals. White is a raised stop, and it's hard to see the ATR dot, but I have it on that second ATR dot. And the reason I wasn't nervous a few days ago when this big pullback happened was because I saw so much institutional buying. So I wasn't real worried about it. And these folks were buying prior to earnings, which just happened yesterday, and we are continuing to move up. So again, the nice thing about this, the way our stop management works is I'm constantly looking at the technicals, the ATR and everything else. And as long as this white line is above that purple line, even if it comes all the way back to here, we leave with a profit. Builder, another one of our stocks. Here's our entry, initial stop. I stop is initial stop. Look how much higher our raised stop is. And this thing looks like it's moving. And you can see how tight I have it. I have this one tight because we went to a red ATR. Once that goes back to a green ATR, I'll loosen it up. I probably won't lower the stock. I just won't raise it as quickly. I want to give it a little bit more room. What else can I show you? We've got OC finally. We went into OC, Owens Corning, the other day, and immediately after we went into it, the stock just started to fall, which is going to happen once in a while. But that's why we have our initial stop in place. But it didn't go very far. It turned right around and ran back up. So now we're in a profit. I haven't moved this stop up too much higher yet, but I will soon because the technicals, again, still look good. So just wanted to show you that this is a brand new stock that we bought a couple of days ago. We've owned this before. This is Tesla. I had bought this because of some order blocks that look good to me. And there's our buy point right there. Here was our initial stop. We're already starting to raise our stop, but our stop is not above purple, which means we're not in a full-on, we can't lose $1, but I think that's coming. I really think that's coming. I like what I saw down here. I like the momentum is growing, so we'll see how much money we can make off of Tesla. So anyway, short video today. Just wanted to show you a few of our stocks. We've got a couple that are down just a drop. FTNT. We bought it on the purple line. It's now a hair below, so I'm not real worried about that. ELF, we are above, even though that was down today, we are above where we purchased it. Here's our initial stop right here. It's always in red, and I suspect that will continue higher. We also have an ascending triangle, so I'll keep an eye on that. I don't want it to break below that red line. But the bottom line is the stock market looks good to me. We survived the debt crisis. We've broken through the February high. Clearly, now we need to get through that August high. And I try not to predict because predictions are worthless. But I do think that this market has a lot of room to run to the upside. I'm buying stocks as quickly as I can. I will only buy them when it makes sense to buy them. I'm hoping we're going to get a little bit of a pullback next week, actually, Monday, Tuesday, Wednesday, something like that. And on the next pullback, I'll be adding even more securities to different portfolios, Group 1 and Group 2 portfolios. So that's how I do it. It's working out very, very well. I think we're going to have a fantastic run towards the end of the year. You know, it's always choppy. There's always climbing the wall of worry, which you've heard. You know, now that we're past the debt ceiling, there will be something else for us to worry about because that's just the nature of the market. But things look good to me. And let me see if there's any resistance up here. No, not too much. I think this market is going to continue to rise. So we will keep buying very, very high quality securities. That's all we buy. And we try to buy them right when their momentum is kicking in to give us a little wind in our sails, no pun intended. But that's a story. Have a wonderful weekend. If you have any questions about anything, just give me a ring, get on my Zoom calendar or shoot me an email, and we will talk soon. Have a wonderful weekend. Bye-bye.